What's going on, everybody? Hope you're doing well. My name is Lamont. I've been a full-time trader for 7 years now, part of the TheChartGuys team for more than half of that, where I head up our futures room and the swing report. In this video, we will go over some hype sector names and then also the overall market, hit you with some trade zones, and let you know what to look out for in the weeks ahead to assess market strength or weakness. So let's get into it. All right, so first things first, starting off with a bit of a bellwether NVDA. Suppose we could look at SMH in general, but they're practically the same chart right now, so not not exactly, but either way, they're very similar. So let's just stick with NVDA for now because it's just as long as NVDA and semis in general are strong, then the overall market's probably okay. There are definitely some red flags within the semis. Like for example, INTC after initially holding over this key structure, right? This guy. It's this guy over here. Let me just zoom out, I guess. All right, so this fella over here is what was making all of these lows here. And so when we zoom into it, it looked like they were going to try to hold back over it, and they were for a second, but now they're back under it. So a bit of a red flag for sure. AMD clinging on to its key area. But yeah, so let's just take a look at NVDA first. And so as long as NVDA is holding over this little daily demand zone that is from February 22nd to March 1st, not sure where the label went, then the buyers are actually still fine. Remember, there's a gap to fill back down to 823.94. So as long as these sellers do not fill this gap, NVDA buyers are looking okay. So I think in the next week, if we do continue to see semis weaken, then I'm thinking you'll probably see a battle for this, right? Like what happens here is going to be super key. The next area of balance is also off of a gap here, so would not be surprised to see these sellers come and try to crack both of these two structures here. This is honestly even more back and forth trade than here, so would not be surprised to see that test coming sooner rather than later. But they take it one day at a time. As long as they're holding over 791.91, no big deal. So this trade zone is then essentially looking for a potential hold of this. That's pretty much it. Reminder, if you want to use these zones, you don't have to use them exactly as like these. This is where the trade makes sense, where the trade starts making sense. What actual trade you take is, very much largely up to you. What I recommend is always fading cracks, right? Like fading if they come back down in here. Was this the trade zone shared last time? I think it might have been this one. I'm not sure. If it was this, then it's the same idea really. Okay, so what we want to do then is look for something like this, right? We know the trade should be based off of this structure. If these buyers are going to stay constructive from here, they have to stay over this. So you can look to fade moves down here. If you come back down here, crack this point of control, don't see follow through, move back over it. You can buy that move back over it, throw a stop under the low, chop it up no later than this daily no change test. Why here? Because if they're going to come down into here and hold this point of control, the first place where these buyers should fail if they're going to, well, the key spot they have to get back over is 823.94. So it's a very reasonable place to fail if they're going to fail. We don't know that they'll fail, but if they are going to fail, that's a very reasonable place. And so we can start looking for our exits there. Okay. So daily charts bearish, lower highs and lower lows. Lower high resistance is 906.34. And again, holding over 791.91 is going to keep these buyers happy, but holding over 823.94 is going to keep them most happy. No test of 823.94 would be ideal. Essentially, no fill in this gap. Moving on to SMCI. So SMCI came to the trade zone, hit that target here. It's still very clear. It's the same, nothing has changed really. Ever since we've come down into here, there's no change. All of this price action right now is being dictated by this demand and this supply. So this is honestly a bit of a red flag for buyers though, right? You have to call it for what it is. The fact that these buyers could not get back and touch this point of control is very notable, because they have to get back over 1141.95 in order to be constructive relative to this supply. So to fail that is notable. And remember what we can do to assess which one of these structures are being stronger right now, right? So this is our key supply. This is our key demand. How far did the sellers get into the demand zone? They touched the point of control. How far did the buyers get into the supply zone? They did not get to the point of control. So you have to give slight edge right now to whom? It has to be these sellers. As long as they're preventing a test of the POC, and as long as the sellers are testing this POC, who's winning here, right? Does that mean that they will win in the end? No, but you call it for what it is in the moment right now. So daily chart also bearish, lower highs and lower lows. Key lower high resistance 1057.18, made pretty much right off of the value area low of this key supply. I would not be surprised, you know, if we were to zoom in, if you were to see, well, it's not synced to all time frames, so you won't. Hold on a second here. I wouldn't be surprised if you were to see very, very clear hits off of it, right? I bet if we zoom in even more into the 5-minute, you'll see even more detail, right? Clearly a battle for this level. Very, very clearly a battle for this level, right? And then over here, again, very similar situation, clear battle for this level. So that's pretty much it for SMCI. No real major change unless acceptance under this fella or acceptance over this fella. So would not be surprised to see more balance. It's kind of hard to ignore. This is potentially a head and shoulders, right? And the way that I like to use the head and shoulders patterns is I just use them as guides, essentially visual guides. And as long as the supply making for the head is resistant, well, then this is potentially a head and shoulders, right? So left shoulder, head, potentially looking at a right shoulder here. So then it becomes, all right, well, if you want to play for that, how are you going to play for that? You're probably looking for a lower high, looking for plays off of this guy again. Failures to, even if you crack above and you make a new high over this, if you fail to come to the point of control and roll back down under this, you're still a very reasonable play here. Selling that move back down, throw your stop over here, chop it up here and then here. Okay. Do we have a trade zone for this? Oh, it's already gone, right? It's already shaken out once. You can still be playing off of this structure, but you know, I'll talk about it more in the overall market coverage, but definitely, you know, little red flags are starting to more red flags are starting to appear. Still buyers fine right now, but I'll discuss more in. So I do think it's, especially with earnings season right around the corner now, like 2 weeks or I think it'll kick off. I think it's worth, you know, being a little bit more protective, being a little bit more conservative, especially as this trend matures, right? It's been a heck of a rally so far. All right, moving on to CCJ here, and so for CCJ, where are my trade zones at? So CCJ hit all of our targets, the initial target, and then came back down to this 45.28. And now we're testing this very key supply. This is back from 2007, from May 4th to June 25th. And you can see how the point of control of this, let me show you first, I guess. That's this guy over here. Okay, so this guy was problematic over here. And then you come back all the way back around. And wouldn't you know it, being problematic again. So, and I gotta give a shout out to Red here. Let me, I know I have them saved somewhere here. Let's see. So Red Devil, he is one of our members, and he's been pounding the drum on uranium for a long time. Posts a bunch of stuff in our uranium channel in Slack. So, you know, if you want to trade these ideas with us, right? If this stuff makes sense to you, the information makes sense to you from a technical perspective, you understand, or you want to learn, right, this, and you want to, you know, learn how to manage your risk, trade with a bunch of full-time traders, then come check us out. Red's been very helpful for the community, putting us on top of, like, I guess more macro looks or whatnot. So this one was way back, I forget, it was a month ago. I grabbed some 43 calls for March 22nd. And that was like here. That was this day. And I missed exiting them on the stream. So I did not exit them. And then unfortunately I had to, not unfortunately, not really, but because I didn't get my exit there, and then we came back down, I ended up having to roll it. Let's see, roll it here. So I put another 30 days on, assuming I can figure out, oh, that's it. So I got April 19th. And the reason for that was just because you failed to come down here, right? If you're going to fail to touch this point of control and then get back over the value area high, the only place they should be trying to get to, the buyers, is here first and then here again. Okay, and so the last exit, oh, I don't think I prepared that. The last exit that I did, here's Jungle Funk in here as well. We're talking about our trades. But the last exit was, let's see here. All right, so I'm letting you guys know if we see a test of that 45.28, then that's over here. Then I'm gonna look to start chopping it up. Let's see here. Let's see. So I just closed the rest here, and that was at 402 because that was here. Near the end of the day, I just closed it out because we're pretty much flirting with this point of control. So again, if you want to, have some help putting all these tactics together, come check out the chat room. Links in the description below. Great community, obviously. It's got that Dan energy, right? So everyone's really kind, everyone's really supportive. So if you want, check it out. All right. So anyway, CCJ 50.22 is going to be that key level. As long as 50.22 is resistant, then we should be just expecting a test of 45.28 again, right? Because now we're dealing with this supply here, right? And so what happens here? If you reject from here, where do they go? They come down here, right? And so the first place they should be looking to get back to, if you see lower lows on Monday, is first 45.28. And if they can't get back under 45.28, then that'll be very good defensive posturing. As long as these buyers are holding over 45.28, then it's a good defensive look. So lots of space for a daily higher low. Anything over 41.32 is going to be good for one. I'm personally very interested in reloading this. And you know that this is all local demand now, right? And so we can make adjustments to this now. Oops. Oops. Oh, right. We have this extended target. So all of that was laid out. Everything was laid out, and so anyway, let's see here. What? Okay. All right, so now what we can be looking out for is something like this, right? We know, and it's going to be a large range, and again, like we don't, obviously I don't just scale into the range, as you can tell from the plays that we share, we do it a little bit differently, but this is the framework of the trade, right? Something like this makes a lot of sense. We can even come all the way back down into this guy. Something like this, a lot of sense, okay? You can even, extended targets, no problem. But basically, I would love to see price come back, test this 45.28 level, and I'll look for a play if that occurs. Okay? And this is honestly looking really great. The monthly higher low has now been set. Weekly chart had a little lower high, lower low, no follow through, a lot of space for a higher low over 39.02. So bigger picture, this is looking pretty good here. Curious to see what the TD counts are. This is a fine looking count. This is a totally fine looking count. So CCJ looking pretty good. Okay, moving on to TAN here. TAN not looking as good. So continuing to have problems at this value area high. It makes sense. Like you got to call it for what it is. This is starting to not look so great, right? Like you really want to start seeing acceptance over 45.21 to have, to start having confidence in a test of the next key area of supply up here at 51.70. So if you use this trade zone way back when and you chopped it up, your stop is still in the same exact place. I still think that's fine. And bigger picture, this trade zone still is very reasonable. Essentially, it's just bottom fishing off of this structure's point of control, knowing that if you hold this over this structure, they're going to try to come here. But the first place that they're having problems right now is here, which makes a lot of sense because this guy is what held price for all of this and now has flipped into resistance. Okay, so no change to this. It's really just a big old weekly EQ. It's really anybody's guess, how this breaks, but you have to give it up to the sellers right now because these buyers, they should be trying to come here. The sellers should be trying to keep price in here. And as of yet, the sellers are getting the job done defensively. They're not advancing well because they're not moving under 39.98, but they're doing well defensively, finding a good amount of acceptance under 45.21. So 45.21 will remain key in the short term. All right, that's pretty much it. That's pretty much it. All right, so let's get into, wait a second, where is MSOs? That's weird. Where is MSOs usually? I forget. Either way, we'll do it here. I feel like it used to be earlier. Either way. Is that everything? is that all the videos there? Or is that all the tickers? Hang on a second here. I do apologize. Okay, I do it there. Good thing I didn't lose it. So, okay, here's MSOs. And, all right, so let me bring back the trade zone that was shared. I believe it was this guy. And so recall this one was shared back here, right? So it came into the trade zone and gets right to the target, rejects from this key point of control 10.92. Remember what we're paying attention to. We're paying attention to these two key structures, right? This lower structure is key because as long as we're holding over here, we should expect price action like this. And as long as we're holding over here, the buyer should be trying to come here. It's exactly what happened last time, and it's where they have problems. But as of right now, they're still bumping up into backtest of this guy over here. And so you'll notice that multiple highs have been made off of this structure. That's why the initial target was there, right? So but by now, by last week, if you use this trade zone, you should have chopped it up no later than here. Your stop can still be under this low. Don't need these orders anymore. You can pull these stops up and it can look like this now. The trade zone, I mean, the price came back into the trade zone again and is holding this key point of control 9.37. Absolutely key. It continues to be key. As long as these buyers can hold it over 9.37, then they should be trying to do this. Okay, so next week we'll get very good information based on either 9.37 or 10.92. You can clearly see how it's a battle for these two. Literally, this session's high at that point of control. Literally, this session's low pretty nearly at this POC as well. So that's pretty much it. Daily higher low trying to be set here at 9.25. Got to break over 10.15 next week to have confidence in that daily higher low being set. Key resistance is 10.96. Okay. And if we do find acceptance over 10.92, they should be trying to come here next. 1352, 1378. All right. Yeah, that's it. All right, so moving on to the overall sector update now. So for the overall sectors, starting off with, overall market, starting off with SPY here, another situation, right, where you get these really, really clean hits. Really, really clean hits off the POC, off the POC, off the value area high. Very, very clearly, the market is telling you this is now key supply from 320 to 4.3. You'll notice the high of Friday right off of that point of control. And so next week, it's going to be all about 520.31. Can these buyers get back over 520.31? If these buyers can get back over 520.31 after holding this POC test of this key demand zone, it's pretty much right back to buyers being comfortable again. Buyers are still comfortable here. So what I was saying earlier about, some red flags, one is coming back down into a prior area of demand. This is the first time that the SPY ES has done that, right? This is the first time that the SPY has had a big block of supply overhead on the daily time frame ever since the October low. This just hasn't happened since then. The last time that's happened is over here. Here's supply, and now you have price action under it. This big daily chunk. Ever since here, that hasn't happened, right? Sideways higher, sideways higher, sideways higher, sideways higher, sideways higher, sideways higher, sideways. And I guess you could make the argument that here, but that's not a lot of days. So this is the most notable amount of daily overhead supply ever since the October low. So if they can't find acceptance over 523.1 next week, it's all about 512.82 again, and then 510.80. This is probably that doesn't seem like retail by itself. There's a lot of things to be considerate of, right? Q1 is over, and so you probably have institutions who want to book some profits from a profitable quarter. You probably have people who are maybe being a little bit more careful with earnings season coming up very soon. And so this has the potential to build, in my opinion, right? So again, all about, we don't know what will happen, right? We have our references that will let us know what's happening in the moment. 520.31, 512.82, okay? Basically, as long as 520.31 is resistant, then we're going to build on this selling. And if we get back over 520.31, then it's right back to looking for more balance and breakout. All right. Curious to see what the counts look like. It's fine. That's fine. That's fine. That's fine. That honestly also looks fine. Okay. Let's see here. That's just a TD sequential indicator. It's like it's a mathematical approach to trend identification. All right, so moving on to the Qs here. Do we have trade zones? I forget. Okay, so I think we were just, okay, that makes sense. Both of these honestly still make a lot of sense. So this guy is really just looking for the potential of a lower low under this guy with no follow through. Why? Because the gap to fill is from 432.74 down to 425.70. As long as that gap remains unfilled, bigger picture buyers are going to remain comfortable. So this is all really just sideways trade. It's just also a bit of a red flag though, right? Because this is the most sideways trade that we've seen in a long time. Additionally, it's sideways trade that has a lot of overlap over the last area where there was sideways trade. So again, starting to see some cracks here, but the sellers, it's still on the sellers to do some proving here. All right. So daily lower high and lower low. Lower high resistance is 446.95. It's all about this structure here. Break of the value area low, no follow through. Pop over this 440.59, which is just the high of this little structure over here, which is the last little bit of daily balance that these buyers have struggled to be constructive on top of. So for me, that's a bit of a reference. If these buyers are going to start being confident, they need to start having acceptance over 440.59. That's pretty much it. If next week they can break to a new high over 447.53, that'll be another weekly higher low play. I mean, another weekly higher low. All right, so that is pretty much it for QQQ. For the Dow, so the Dow came into the trade zone as well. Not looking so great. It's the kind of situation where if you get all three fills on this session, right? Assuming you just trade these zones blindly, and then you get a move above, it's very reasonable to chop it up, right? Just to get some risk capital back and stay in control of the trade. So if you did do that, your stop's probably under the low. If you didn't do that, and just take the stop, it's only less than 1%, so whatever. And it's in the next week. So for the Dow, super key here, right? You have very clear areas of demand here, and honestly, the Dow is actually looking like if you're gonna try a sell on the SPY or the QQQ, one of the majors, then it looks like the Dow is honestly a pretty good one. Just happened. The heck? Yeah, it looks like the Dow is a pretty good one because you have a lot of space to work with under this key supply. So, next week it's not a bad way to look for that hedge, something like this. Don't hate it. Very similar to that RTY situation. Something like this is very, very reasonable. Essentially looking for a daily lower high or a lower high under this supply. That's really it. Okay. All right, so next week, all about 388.56, 386.72. You can see that this move up here on this day, let me hide these. All right, so this move back up here on this high of the day that doesn't get to the value area high is a pretty notable failure. And so next week, if they fail to get to 391, get acceptance under 388.56, that would be very constructive for these sellers. They should be trying to crack under this low. If they crack under this low, eyes on 383.12. All right. Moving on to IWM. So IWM, this was that hedge, right? One of our hedge ideas. It was just, looking for the potential to fail, holding over this key supply, right? It was demand back here, made all these lows. Now it's making all these highs. And it's currently where the battleground is right now. So Dan is watching for this rising wedge. And these higher highs continuing to fail, seeing follow through over this guy is definitely supportive of that potential rising wedge. So far, it's starting to see a little bit of follow through here. 203.01, we had this marked up as a really key level because this was just a little lower low here that didn't see follow through. It's also these prior highs. And so very reasonable for these these sellers to start stalling here. And it's also very notable that they failed to find acceptance over 205.46 for now. So next week, if they see new lows under 202.88, it's right back to looking at this 199.26 test. That's this major point of control of this big guy over here, which is rejected price, rejected price, rejected price, and then it's been a battle for it in recent history. Okay, and they failed to touch down last time. If that happens again and they don't touch down to the point of control, that would be a good look. It would mean that we're still seeing a good amount of demand coming out of this zone. All right. So if they hold 203.01 next week, all about 207.61, anything over that's going to be, they need acceptance over that to open up all of this price action here. Okay. So for a potential trade zone then, do we not have any right now? Yeah, bigger picture, that one's still fine. I think if you want to look for like if you're like I'm gonna not do it. I'm not gonna I'm personally gonna wait. I did make a play for it. I think here I'm gonna wait to see if these buyers can get back over 207.61 to look for a potential laggard play, longer, bigger picture, right? Because if the market is going to continue to rally, if the rally is going to broaden, the small cap should have a go as well. So I'm still interested in it, but personally, I think I'm gonna wait for something like this, right? I want to see this crack above, look for a back test play here, and then ideally hold above it. But if you want to be more aggressive, something like this is also very reasonable. All right, looking for no fall through beyond the value area low, and then just trying to get back here. Something like this is very reasonable. Okay, but I'm gonna wait for this. Probably. If there's like a nice day trade in here, then we'll see. But yeah, we'll see. Okay, so the dollar, again, testing this key supply here. You have had a rejection recently, you rejected again, and so it's right back to looking at these two steps over here. 104.745 is that key point of control above, and 103.135 is that key point of control below. So I would not be surprised to just see more chopping about right now. Like this is a very messy chart here. Would not be surprised to see just more of it. Essentially, right now, it's this structure versus this structure. That's it, right? All of this price action has been dictated by this structure. You can kind of ignore this one. It's good, right? It's a good reference, but really the important ones are the ones that are containing all the price action right now. Okay? So the asset buyers would prefer, to see a rejection here. Lower low, crack 103.135, and get back to trying to come back down here. It's just a hot mess on the monthly, just chopping around, but it's still very constructive, holding over most of this balance here. All right. And finally, the VIX. So this is notable, all right? Remember what we were talking about here. This is this October 12th low here is pretty much this guy, right? On SPY. It's pretty much the October low. It's not exactly it, but the idea is it's a pretty good reference, right? As long as we are under 15.44 on the VIX, then essentially you're not really seeing any volatility that is, any higher than what we've seen since the October low. So this is a notable character shift here. Acceptance over 15.44, that what does that suggest, right? That just suggests, well, again, more volatility relative to what we were seeing ever since the October low. So this is definitely something to pay attention to. If the VIX can't get back under 15.44, then we'll probably see some more selling in the near term, or at least some more violent selling if we do see selling in the near term. Okay, so that's pretty much it. Yeah, that is pretty much it. So I appreciate you tuning in. Thank you for sharing some of your time and energy with me. If you found any of that helpful, then if you wouldn't mind giving us a like and subscribe, that would help us out a lot to, to support the algo gods. I don't know, the algorithm gods. Yeah, and if you're interested in joining a community or checking out the swing report, get these live trade ideas sent to your email. Check us out. Links in the description below. Otherwise, I hope to see you guys on the next one. Farewell.